I think it is guaranteed, because the weakness what we have here is due to underconsumption. People hold back their savings, sir, but if and as the air clears up, they will consume, and the result of it, there will be no negative growth across the euro area. There's some negative growth, sir, at the moment, but very shallow, has to do more with structural, not with cyclical elements.
I was just saying to you off camera very quickly that there's a lot that's changed since we caught up in April, but it feels like there's a lot that's changed even since last month and the incoming data. What are you witnessing?
I am not so sure that there was so much change in the data, because not everything went down, yet a number of elements go up. And what we still have is a growth development well about the double what it is consistent with our inflation rate. So I don't think, how to say, too much has changed.
The view from the market, though, is after we had a back-to-back rate reduction from the ECB, the first time in 13 years that has happened, now it is game on and they can price in reductions at every meeting from here into about mid-next year. What do you make of that market pricing? Are they wrong-footed?
No, that's what the markets are for. They try to do something which makes the most money out of it. So they're going now for a higher cutter, because this is where they would profit most, but I don't think it will happen.
You don't think there'll be back-to-back rate cuts at every meeting?
No, rate cuts perhaps. We are data dependent. We don't have yet the data for December. We have new forecasts then, so it may be, but it won't be a big cut, at least as far as we can see the current projection, the current data.
No jumbo-sized rate reduction up for debate at the last meeting. Should it be up for debate in December if the data continues to come through like it did at the last meeting? I'm
sure some of my colleagues will go for a big cut, others not. And in my case, I would say I will look at the data, and I can even me imagine very easily, how to say, that we stay put, depending what the data is. Whether
you support it or not in terms of a 50 basis point rate reduction, should it just be a matter for debate?
At the moment, how to say, we cannot prevent anybody from raising it and putting it on the table. So we are a larger group with independent national central bankers, and the result of it, if some of the feeling it should be 50, they will say so, and the others will say, I don't think that is useful for reason 1, 2, 3, 4. How sensitive do you need to be around jumbo-sized rate reductions? Because it feels as though the optics changed this year thanks to the Federal Reserve going for that size of a reduction without any emergency setting and then communicating that was really about getting back towards neutral more quickly. Hasn't that changed the game around using that sort of tool for markets? Definitely. I would say without the Fed, 50 would have been easy to justify as the Fed moved forward. But as we also can see, the Fed is also now holding on. So this is a kind of a precautionary step. I saw the change what we had, or the cut we had recently, as a precautionary, because if and as December doesn't turn out as it is, we can not cut anything, we leave it as it is. And if things really get as bad as some claim, we can have another 25. 50, I would say at the moment with the data, no.